Hello, Clarissa.
Hi,
Tracy.
good afternoon.
Yes, good afternoon. Can you hear me?
Yes, loud and clear.
Okay. So I have make you as a co-host. I have make you as a co-host. Can you you can show your screen if you like to, and so that both of us can show screen. Easy to communicate that way. Is that okay?
It's okay.
Yeah. So yeah, we can start now.
Yes.
Yeah. So what's the question you want to ask me?
Yeah, a lot.
Okay,
I've
go ahead.
been-
Wait, I think the voice is a bit soft.
Yeah, hello.
Wait. Okay, can you speak again? Try.
Yes. Do you
Okay,
hear
okay.
me?
Yeah, good. The voice is good now. Yeah, okay. What question you have?
Well, I really have a lot of questions. First is, usually you would always say there's a gap, there's a gap, and there's a gap, but I really don't know where to locate that gap.
Okay. So let me you want to show your chart or you want me to show my chart?
Your chart, Benny, I
Okay.
don't have yet.
You don't have chart?
No, I don't have yet. That's why I just came from long absence.
Oh, so you have not trading yet. Are you saying that?
Not yet. But after this, I'll invest by with Fusion.
Oh, okay.
But
Yeah,
I need at least the basic ones that I need to know,
okay.
which at this point in time I really don't have yet. I
Okay.
forgot for a long time.
Yeah, but you can open a demo. You can use your Fusion demo account first, right? Well, so at least you can practice, right? You know what I mean?
Yes. After this, I'll do that.
Yeah. Otherwise, you will not able to. You just listen, but no practice. Also,
Yes,
not really
yes.
helpful.
Yes, I'll do that
Yeah.
because I've already started what is that training with you.
Okay, wait a second. I let me see the share button. Okay, can you see my chart now?
Yes.
Okay. Now, what is a gap? Now, look at these two candles. Can you see my pointer?
Yes, I know. I
Okay,
can
this
see
is
it.
one long ERC, right?
Yes.
We have an open here. Market make a low.
Uh-huh.
It go up. It make a high.
Yes.
And it close here.
Yes.
So we have a bullish candle. So
What about the other one? There's another after that big candle.
yeah. So
that?
now let me go through. Your question is how to identify the gap, right?
Yes.
So now you see the closing price is here. So
Yes.
next candle, the opening price, it gap up. There's a gap. It open here, right?
Yes.
Next candle. So that is the gap I'm referring to.
Okay.
Can you see the two candle have a gap?
Yes.
Yeah, the closing price is here, first candle.
3.
Opening price of the next candle is here. There is a gap.
That's 3.41 and 3.4174. The opening candle.
34145.
45. The closing candle. The closing price, I mean.
Yeah. So if I switch to bar chart, can you see here?
Yes.
This is the closing price.
Yes.
Right. So the closing price is 34144, right? About there. 341.
Yes.
Then the opening price of the next candle is this one. This is the opening price.
Which is 3417 something.
34173.
Yes.
So that is the gap I'm referring to.
Okay. So the gap is always between the closing candle of the closing price of the ERC and the opening price of the next ERC.
Yeah, if there's a gap, but usually you can see this candle, the closing price is here, right?
Yes.
The next opening price is almost the same level. It's supposed to be the same. So there's no gap here.
No gap.
You see this one? There's a little gap, right? Open closing price. This one, opening price here. Right?
Okay.
But this is a bigger one. You can see very clearly there is a gap there. So if there is a gap there, usually the price will want to come back to fill the gap before.
Okay, it will go up again.
Before you fill the gap, before you want to go up again. If it is bullish, right? So that's the gap I'm referring to.
Okay.
Yeah, now the gap.
Yes, I got it.
Example over here. Look at this. It's a gap here in this 3 candle.
Which 3 candle? The black, the green, and the
1 and
okay.
1, 2, 3. 3 candle. So now you tell me where is the gap?
So first candle to the second candle.
Just now what we see, what I show you is a 2 candle, right? Just now I show you is 2 candle.
2 candles.
Okay, that is a gap. Just now where is it? Here, 2 candle.
Okay.
2 candle that create a gap. So there are times where the 3 candle create a gap. That's a more common one. 3 candle that create a gap. So in this case, we have 3 candle here. 1 is a black one. Followed by the ERC second candle.
Second candle.
And the third candle. Right. So this is
the first and second candle. The first and second candle. There's
the gap is exists in here. You can see that the price is here.
Yes.
Right. The body of that opening price is here. This is a bearish candle, right?
Is it not the closing?
No, not necessarily the closing. Just the 2 candle formation. Just now the 2 candle is you can see is a closing, right? But this candle is a 3 candlestick, right? So we don't look at the closing price or opening price. We have to look at. You can see that this candle is a bearish candle. It means the opening price is here.
Yes.
So this is opening price. The market make a high, right? This is the high.
Okay.
This is the opening price. Market make a high. Then market go down all the way, make a low, which is here. And then eventually it close here, right?
Wait. I didn't get it.
Look at this candle.
Yes.
This red candle, this black candle. It's a bearish candle. So in a bearish candle, the closing price is below the opening price. Is that correct?
Yes.
So see the opening price. This is the opening price, right? This opening price. And then after market make an open price, what did the market needs to? It make a high. It create a high. After that, it create a low. Then it close here. So this is the bearish candle.
Where did it close? Sorry.
This one. Can you see what I draw?
Only for the first candle. We're talking of the first candle.
Yes. So if you join them together, it is a candlestick, right? So the opening price is here. The high the market have created in this 4-hour candlestick chart. Then the low and the closing price here. So it's this, I'm referring to this black candle right now.
Okay.
This black candle. The opening price is here.
Yes.
The pointer, wait. Let me get the arrow. Can you see this one, the black candle, the opening price is here.
Yes.
Then it create a high. And then throughout the 4 session, it come down, it make a low, and it close here. Right?
Yes.
Next candle, it open here.
Yes.
No gap, right? Then the price go up. It make a high.
Okay.
Eventually close here. Okay.
Okay.
Next candle open here. So if you base by 2 candlestick alone, there is no gap in between them. But if you base on 3, put all these 3
The
candles
3 candles, there's a gap.
together, there is a gap. So the gap axis is here, where the first candle and the third candle, there's a
And the
gap.
third gap. Okay. Okay.
The
okay.
first and the third.
First and the third. Yes.
Can you see the first and the third? There's a gap.
Yes.
Let me use a drawing tool.
First and the third. Yes. The first close. Dito. Yeah.
This
So
is
first,
the
yes, that one. The closing.
yes. The third candle, where is the body is here, right?
Yes.
That is the gap.
Okay.
So you're looking at 1,
2,
2, 3. This is a gap that created of the 3 candle. Sometimes we can use, but more commonly, we will just use the wick to the wick, which is the top of this candle. Then the third candle lower wick.
Okay.
Can you
Why
see the
so?
gap there?
Why so?
That is usually because if this price make a high here, usually the third candle, it should come down to meet the first candle high before it go up higher.
Okay,
But in this case, you can see that we have the high of the first candle is here, the low of the third candle is here.
Yes.
So which means that they have left a gap then to be filled in the future, for the price to fill in the future. Yeah. Or rather, you can look at this way also can. You can see that this candle, how should I put it? Okay, the first candle, we have opening price here, the closing price here, right?
Yes.
So we have opening price. The price goes up first, it trade higher, make the high of the day or 4 hour, and then it trade lower, make the low of the day, and then it close here.
Yes.
Next candle, the buyer comes in, they buy up, right, until this high. So now you try to go back to the first candle. What the first candle did was the opening price, market make a high of the 4 hour, then the seller comes in to sell down until you create the low of the day, which is here, right? And then
they go up and close.
Market close here. Okay, so now what we have in this black candle is we have the seller in control, right? Because that's why we have a bearish candle. The seller is control. That's why the closing price is here. Next candle, the second candle, black candle. You can see the price open the next candle. The buyer comes in, they buy up. So you have the seller come down, push the price lower. The buyer comes in the next candle, push the price up. So this is balance. We have the seller, we have the buyer.
Okay.
Right? So what is imbalance is from this high onwards until this first candle high, there's a gap there because you only have buyer and no seller.
Yes.
That's why you have this green bullish candle.
Okay.
Right? So you have buyer comes in, but no seller. So from here to here is actually a big gap.
Okay.
But the third candle comes in. You see what happened? The third candle, the seller comes in.
Okay.
Sell down until here. So between the third candle high and the third candle low, they left a gap. Can you see that?
Yes, that's it.
That's
it.
So if you have difficulties to understand this, you look at this. This is another way to look at it, right? We have the seller. This candle, the seller dominate the whole candle. Then the buyer come up to push the price up. So in this whole area is all balanced. This area, entire area is balanced. When I say balance, it means that you have the seller
and the buyer.
But from this onwards, from this candle high onwards until here, there's only buyer, no seller.
Yes. Yes. Yes.
Only the third candle comes in. When the seller comes in, they sell and start to move the price lower and make a low here.
Okay.
So here you have the buyer in this candle. So here you have the seller. So this portion is balanced.
Balanced.
But only left this portion which is not balanced. You will only have buyer and no seller. You follow? Only
Yes.
this
Yes.
portion.
Yes.
So
yes.
that is the gap.
Okay. Okay. So that would be the gap for buyers.
That will be the gap for in
Seller.
future for the seller to sell
Seller.
down, because you only have buyer. This
Buyers
gap,
here. There. Yes. Yes. For the seller.
yes, for the seller, because in this gap that is left behind, you have only buyer and no seller. So in
Okay.
future, the
Okay.
seller will come down to sell it and balance these three candle
Yes.
candlestick.
Yes. I understand. Okay. Okay.
Yeah. So if you look for another example, let's say.
So I really have to be keen
Look at this
on
one.
the gaps.
Look at this three candle.
3. 1, 2, 3. There's no
Where's the gap?
buyer. There's no seller.
Where's the gap? Yeah.
1, 2, 3. 1.
1, 2, 3.
Yes.
Where's the gap?
It's so big.
Yeah. So you can see that the opening price is here.
Yes. And then closing.
The low is here, right?
Yes.
Then the closing is here.
Yes. And then buyer again.
Then the next candle immediately open, right?
Open
So
here.
no gap here, no gap, right? Immediately open. And it make a low here. Then it
Uh-huh.
rally up, make a high.
Yes.
Then move to the next candle. So
Which is
you
a
can see
seller.
that, so now in this whole entire movement
That's
here,
a gap.
there's a gap. This is a buyer.
Buyer's
no seller.
gap.
There's no seller, right?
Yes.
Right, from here until here. This whole entire area is a gap.
What about this
So you
first
see what happens to
candle?
the seller eventually? The seller comes in, fill up this gap.
Benny, what about the first candle? They're all buyers.
Huh? Yeah, so there's a gap. You're right.
Yes.
Yeah, you're catching up very fast.
Yes.
So now here and here.
Yeah.
Yeah, so this is a gap.
Okay.
So you can see that there's always has this also a gap, right? So we're talking about this.
Yes.
So this gap already filled, but this gap not yet filled. In future, you will get filled.
Okay.
You follow?
Yeah. Yeah. Slowly.
So now you understand the gap concept?
Yeah. I mean, you've been talking about this gap. How do I see this gap? I can't
Yeah.
see it.
So you can see that this is the gap is still not filled yet. We can draw a line there. This one not filled yet.
Yeah. Yeah.
Okay.
So when you say a gap, there is an imbalance between the buyer and the seller. Am I
Yes.
right?
Yes.
If it's a grade, it's a buyer's gap, which means that the buyer would go into that portion.
No, you don't have to think about buyer and seller. That will only confuse you. I use the example trying to make you understand why there's a gap, because there's imbalance between the buyer and the seller. That's why they create a gap, right?
Yeah.
So for now, you don't want to think so much about buyer and seller. You just think that as long as the three candles exists a gap, this will be act as a magnet to pull the price towards it in the future. The price will want to move towards this area.
Okay.
In the future, you just remember that. Don't forget about it. These are the area that potentially is going to attract
There's
the
a gap.
price to come down
Okay.
in future.
Okay.
So don't think about buyer and seller, because think about buyer and seller will make you confused. I use the example buyer seller so that to explain to you the behind the reason that create a gap. There's an imbalance of buyer and seller. That's why there's a gap. But for your case right now, you just remember, as long as there's a gap, it is acting as if like a magnet to pull the price towards it, then you'll bounce off the area again.
Okay.
Okay, so example, we have another gap here, right? Just now we're talking about this gap. Can you see? We have one. Just now I was talking about this one. Then you say below there's another gap. Yes, you're right. Below there's another gap. This one. So you can see the first gap, it already filled
up.
But second one, not yet filled. Then we have little gap here also. Can you see that? Not filled.
Yes.
So now this one already filled. We can remove it so not to confuse. So now we have two gap not filled.
Okay.
These two gap not filled, which means that right now we can see that price is in the bullish, right? Is it bullish?
Yes.
Yes. So price is bullish. We don't expect this gap to be filled, but the moment price start to reverse down,
yes,
then it will likely to come to fill this gap before you want to go higher.
Okay. Which gives me the second question about when the moment the price starts to reverse. So when do I expect how to spot the reversal?
Okay, very simple. Now in an uptrend, we see the price make a high, right? It take out this high. After it take out this high, usually we'll see the price start to retrace lower. And then it continue to make a new high to take out this high. After it take out this second high, it will usually retrace lower to do the rebalancing. If there's some gap here, then it make a new high. So in an uptrend, we continue to see this kind of movement. Just like over here, you can see that?
Yes.
Right, we can see that the price continue to make a low, a high. After the price make a high, the price pull back. It respect this low, it make a higher low. Then it take out this high, make a higher high, then pull back, go up, pull back, go up, right? So this is a pattern of an uptrend, something similar to what I just drawn here.
Yes.
Okay. So now, how do we know? Your question is, how do we know when the price start reversing down, right?
Yes.
Okay. Now, when you see the price, let's say that this is, which is the low that, let's say the current price, this is the current price. Let's assuming that this is where the price is right now. Okay. So now, which is the low? You can see that every time, in order for the price to make a high, they have to make a low. This low created this high because it took out this short-term high. So after the price took out, make a new high, it will usually retrace back lower into this range from A to B. This is a range, right? After the price take off from A, then it took out swing point C. We expect the price start to retrace lower into the A and B range. Okay, how do I know the price want to start reversing down and not continue to go higher from this point B? It is when we see this pattern happen. It means that we want to see the price rally up, take out a swing high, then it moves opposite direction to take out
lower than the low.
Yeah, so it take out a swing high, the price take out the swing high, then take out the swing low.
Swing low, and then
that is telling us that it want to go lower.
Okay.
Okay, let me draw again.
That's the direction. That's how to spot direction.
Okay, how can we know the price? Now, let's say I see the price in an uptrend. So how can I know that this uptrend stop and the price is going to reverse back down, right? It is when I see this price take out the most recent swing high, then it go reverse opposite and take out the low. This
Okay.
low. So
Yeah.
in other words, the price take out the high, then it take out the low. That is telling us that it want to go lower.
Okay.
It's just telling us if the price want to go lower. Now, before, and we know that for price to go lower, it will not just go straight line like that. You will not, right? You will have to retrace back, go up again. Because why it has to go up? Because it just took out the low. Just like why the price, we always say that once the price take out the high, it has to retrace back. Once the price take out the high, it has to go back down. Once the price take out the high, it has to go back down. Right? You see this? It go back down.
Yes.
It go back down. Why go back down? Because it took out the high.
Okay.
It took out the high. So you just remember one thing. Whenever a new high, example this, a high, is now taken out, right? Is it the price make a new high?
Yes.
So now we expect the price to turn
Go
into
down.
this gap before it go higher, because that is how the market move. Market will never move in straight line. They always go zigzag, right? Whenever the price took out a new high, you will retrace back to fill some gap inside this range. Then it continue to go higher to take out this new high. After the price take out new high, you will retrace back again to where? To fill up some gap here. Then it continue. So that's how the price move. So how can we know the price is going to reverse back down? It is when we see the price take out the last swing low that create the highest high.
When you see the price, what's it again?
You see that this is the most recent swing low that make this high. Once the most recent swing low that form this swing high that's being taken out, which means that we expect the price to reverse back down.
Okay.
So we always look for this pattern, a swing high that being taken out, and then take out. See, this swing high is being taken out. All right, correct. This swing high is being taken out, and now the price create a new high. Correct. Yeah, and then what happened after that? It reversed lower, take out the low, the most recent low that created this ultimate swing high. Once that most recent low is taken out, it means that we expect the price to go back down.
Oh, okay. When Benny, when can I direct you to this candlesticks, the actual candlesticks, not the drawing?
But
that one, the candlestick with a gap, the 2 ERC. This one, this 2, yes, that one.
Yes.
Yeah. How do I know the one that you said that the swing high that take up?
Okay, where's the swing low, right? You can see that we have a swing low here. Correct?
When you say swing low, is that the lowest?
Well, you might be looking at this. Also can. This also can, but if this one you can take this out also can. Okay, let me just, you can take this as a swing low. This is a swing high, right? The most recent swing high. So we have price make a high, price rally up, make a swing high, you pull back, you make a swing low, you go up again, make another swing high. So this is the most recent swing high. Now it's taken out by this price. Now this is the next higher high, right? Is that correct? And this is the
Yeah.
low. Huh?
Yes, I have
it's like this.
difficulty in
like this.
spotting that higher high, lower low.
Why difficulties? First of all, you just understand that a swing high is formed by 3 candles, right? Example, this is the highest high in this swing. It's formed by 3 candles. This candle has the highest high. On the left, on the right, you have a lower high. Isn't that a swing high?
Okay.
This is a swing low. Why this is a swing low? Look at the candle on the left, look at the candle on the right. They have a higher low. So that is a swing low. Then the price goes.
I should take note of that swing high. Sorry.
Okay.
I should take note of that.
Yeah.
Swing high and swing low.
Yeah. So in this case, where is a swing high? This is a swing high. This
3
is
candles. 3 candles.
Yes, a swing high, swing low always make out a 3 candle, right? Example, this is a swing high. On the left, you have a lower swing high. On the right, you have a lower swing high. So that is a swing high.
Right. Lower swing high. On the left is the lower swing high.
Yeah.
And on the right is
also lower swing high. So this is the highest high among the 3 candles.
Lower swing high. And the middle is the higher high.
Yes. So this is a swing high.
So sa swing low
is the opposite.
It's the opposite.
Yeah.
Higher.
You have a candle that has a low. On the left, you have a candle that has a higher low.
Higher low.
You know, on the right, you have the candle that has a higher low.
Higher low. Okay.
That's a swing low.
Yes. Swing low.
Okay.
Yes, yes.
So if you look at this chart, we have a swing low, which is here. We have a swing high. Okay, so far?
Yes, yes.
Now, here it looks like we have a swing high, which we have, but you can see the price make another higher swing high. So we have to take this one and not this one.
That's why.
You see, we have this is also a swing high, but now we have a new higher high, so we have to take this one.
Okay.
Just like over here, right? We have a swing low also, but we have a lower swing low, so we don't take this one. We have to take the lower swing low.
Okay. Yes, I understand.
So now you can see that the price make the price go higher.
And then
right, make a swing high, then it go lower, make a swing low, then it go back up.
Are you right?
Make another swing high. And then in the meantime, this most recent swing high being taken out, right?
Yes.
So this is bullish, correct? Because
yes.
we have trade higher, so this is bullish. But even though it's bullish, we know that as I mentioned just now, whenever a swing high is taken, we are bullish. We expect the price to continue to go higher, but it will unlikely to continue to go higher in a straight line. We will expect to see the price retrace first, and then go higher. You make a swing high. Expect the price to retrace again and go up. Eventually, reach the target.
Okay.
Can you see?
Yes.
So here is example. If you look at this, we have a swing high here. we have a swing low here. This swing low, take out this swing high and now make a new swing high.
Okay.
So what do we expect the price to do right now?
Will go down.
To go down. Why?
Because when the price makes a swing high, we expect that it will retrace back before it will go back again.
It should be when the price take out a swing high. When the price take out a swing high, right, and make a higher high here, we should expect a pullback.
Pullback. Retracement?
Retracement. It's the same, right? Pullback or retracement. Now, this pullback or retracement to where? To the gap.
Okay. So if that's the gap, can we trade there?
Yeah, that's what we want to trade, right? So when we see a price like this, we have a high, we have a low, we have a higher high, which means that this is a bullish, right?
Yes.
Bullish. So since we are bullish, since the price has took out this swing high, we expect the price to do a pullback. And then we want to go long again, go long somewhere here and take profit here.
Okay.
Right?
Yes.
So now we already have 3 points. We have a swing high, we have a swing low, we have a swing high. So now we know that price is going to retrace lower. Now retrace to where?
To the gap.
Yeah, but there are big gaps here.
Mm-hmm.
All right, so how can I know which one is likely to go? So we pull a fit from this low to this high.
What is that?
This is Fibonacci. Fibonacci. We use the Fibonacci to help us to identify. Basically, I use the tools to help me to identify where is. How come that's
the possible?
Yeah, no. I just want to know where is the 50% of this low to the high. The 50%.
Okay.
50%, because we know that now you can see that we have a swing low here, and this is a new swing high. And we know that price, when it's trying to retrace lower, most of the time you will want to retrace to at least 50% of the low to the high. So where's the 50%? The 50% is here, right?
Where?
And then there is a gap also. This is the gap that created by 2 bar. Can you see that? The gap.
Yes.
We also have gap that created by 3 bar, which is, if you look at this, so there are plenty of gap, which means the price is going to retrace back, right? So we have
but most likely it will not come that very soon, no? It will not come that soon, because
if you look at this candle as 1, candle as 2, and candle as 3. Is there a gap?
Yes.
Yes. From here
up to
here.
Yeah.
Right. And if you now you look at another one, which is, take this as candle 1, take this as candle 2,
and the other one is 3.
Is there a gap? Yes.
Yes.
All right. So now we have plenty of gap here, right? Now, which gap you think the price is likely to reverse to, right? We basically can use this as a guideline. We know the price is likely to retrace to 50%. So which means that this is the first gap I'll be watching. If this gap doesn't hold the price, then I'll be looking at the second gap for a reversal. I will not take this gap because this is way too high. Because when we have a 50%, hey, how come it? Can you see?
Yes.
Okay. Now, as I mentioned, when we have this 50%, this is the low, this is the high. This they took out this high, so we know that the retracement usually will not stop above 50%. The retracement will at least minimum to 50%, which is here, or lower. Right? So your question is, can we look for buy here? Yes, if you think that this is bullish, you can always look for a buy, which is at this area. Look for a buy for price to go back up, and we want to take profit at the swing high.
Swing high. Okay.
Can you follow me so far?
Yes, that's a little bit easier for me.
Okay.
For a newbie.
Okay. So which means if I'm trading this pair, I have two options. Since I know that price is likely to trade lower, I can look for a sell.
Yes,
And
sell.
take profit at their 50%. Take profit at 50%. I close my first trade. Then I look for a buy here to buy back up.
Ah, okay.
But the thing is, if I sell here, I will be selling against this bullish trend.
Yes.
Which is not easy, right? So for beginner, for newbies,
I should
it is
not do that.
advisable not to trade against the main
Trend.
trend, right? We want to go with the trend. Now, if the main trend is bullish, we just patiently wait for price to trade lower, below 50%, to form a gap, and we buy. So
we take profits higher high.
Yeah, because you see, we have example, we have this swing low, we have this swing high that took out this swing high, right?
Yes.
So once this happens, we expect the price to retrace lower. To where? To at least 50%
and below.
into a gap.
Yes.
Into a gap. So this is the area that we are waiting to go buy and buy.
Is it possible that when you go 50% or lower, what if there's no gap?
Possible. If there's no gap, it means that price is likely to go for the
down. Lower.
This candle low.
So, which means that even if it's already 50%, I still need to wait for that gap.
No. Sometimes I want to add on is sometimes, let's say on one time frame, let's say on the H4 time frame, and you see that there's a 50%, but there is no gap. There's no gap. So that is in H4. But when you switch to H1, you will see there is a gap. So you take the gap from the H1.
Okay.
You follow?
Yes, yes, yes.
Okay. So now let's say that we based on this structure, we are looking for buy because the overall trend is up. I'm going to buy, right? So when I'm going to buy, and I already identified my area of interest, AOI, which is this gap, right? The second one is this gap. I've identified two areas for potential buy. So when the price coming down lower, how do you know that price is going to reverse back up? How can you know?
I don't know.
I thought you just asked a question, and I give you the answer. Just how you remember, you asked me a question. I say the price is going up.
Yes.
Then you
when
ask
it
me.
Make this higher high.
When the price make a higher high, you ask me how can we know price is reversing down? Like the same answer you're going to get when the price coming down. How do you know the price is going to respect this gap and going up? How do you know? You are going to look for what?
Gap. What is that?
Stop.
Higher. Stop.
The price attack the low, then the price reverse up, attack the high. Remember?
Yes.
So now once the price attack the low, attack the high, now you know the price is going to, if
reverse.
you see this thing happen here, price attack the low, then attack the high, you know that this is going up. If you don't see that, it means the price is going to continue to go lower and look for this gap.
Yeah.
So when the price comes to second gap, if you don't see this again, it means the price is going lower. Don't trade.
Okay.
You follow?
Yes.
Okay. Yeah, what else? What other question?
Yeah. Yeah, what do you mean? Okay, lower low intraday. Yes. In the intraday setup, I know there is that overnight gap, overnight risk.
Yeah.
So if I'm going to trade, I'll be trading intraday, and I want to avoid that overnight
Okay.
risk.
Yeah.
What is the time that I should
Okay.
exit? What if my target, what is that? The price did not reach my target yet, and it's
Oh.
about to end. The session is about to end. What do I do?
A few things you can do. You can adjust your stop loss to your entry price so that even though the price reversed down against you, your trade will be closed at a break even, zero loss. Okay.
Come again. Come again.
Example, let's say, okay. We have, let's see. Okay. I always use this to make the, I always use, okay, let's say that this is where I buy. This, I put stop loss below. And this is my target. Correct?
Yes.
Okay. So let's say the price has, like this. So I buy and the price goes up and my target is further up. But now the session is coming to the end, as what I say, right?
Yes.
The target is not yet achieved. What are you going to do? Now, let's say that originally your stop loss is below this here. So what you can do is you adjust your stop loss from here into your buying price. So now your stop loss is at the same level as your buying price.
Buying price.
Same price. Initially, your stop loss is here when you enter the trade. And this is your buying price. All right? And this is your stop loss. And your target is up here. But as the session is coming to close and you don't want to have any overnight risk and you want to take your profit, there are a few ways you can do. First way is you adjust your stop loss from here, move it up to the same level as your buying price. So even though overnight, next day when you wake up and the price start going down against you, the moment you trigger your stop loss, your trade will be closed with zero cost because you already move your stop loss to your buying price. So this trade will be closed with zero loss.
Okay, that's
genius. And the other way is if your original target is here, and then you say, okay, you are going to sleep and you are not going to let the trade open overnight, you can just simply close your trade, take your profit and go. Come again another day.
Yeah, that's right. That's correct.
Yeah. Then you only use your first strategy when you adjust your stop loss upwards to your buying price is when you are very bullish and you are quite confident that price is going to come to this area. Then you can, okay, I'll just let it ride, I will just take some risk to wait for price to come to my target. But in any case, you're not taking risk already because you already move your stop loss to your buying price. You are break even already.
Yes. That's right.
So you're not taking that. You have zero risk right now, zero risk, and now you're hoping the price will continue to go up, hit your target.
You
and
just
then you
take the
trade.
target.
Yeah.
But then,
Yeah.
even if I have I break even there, I still have to pay my broker.
Well, so what it can do is just adjust your stop how you call it, to move your stop loss maybe 2-3 pips above your buying price to cover your brokerage fees.
Okay.
You understand what I mean?
Yes.
Your stop loss is here initially. This is your buying price.
Mhm.
Like I said, I want to cover my brokerage fees, so you can move your stop loss upwards slightly above your buying price, slightly above to cover your brokerage fees. So if the
Okay.
price did not go up to hit your target and start reversing back down, your trade will be closed, and because you put your stop loss above your buying price, that is to cover your brokerage fees. So you're break even.
Okay. That's right. Thank you very much. One thing more. If as a newbie, I don't think I should do that. I'll just take my profit at the end of the day.
Best is just take consistent profit. I think there are people I know of that they just consistently aiming for 20 pips. 20 pips. That's all they want. Now let's say example, their buying price is here, and they put their stop loss here. All right. The moment the price go their direction by 20 pips,
they take profit.
They take profit, they close. That's right. Even though there's a potential for a price go up, they are not greedy anymore. They just take the profit, they just go for 20 pips. And they are out. And they just do that every day, every other day. And they can make very good profit.
Okay.
So 20 pips is quite conservative, right? Especially for those people who have already trade sometimes before, and they lose money because they want to TP all the time, but the price did not go to the TP, right? But for price to give you 20 pip is quite easy.
Okay. How do I make use of that Fibonacci?
Fibonacci tools is actually, I think here. Let me see, where is it?
So that I would know the 50% of from the lower.
When you I think you should have an open demo account with TradingView. You can have that open account. You don't have to pay anything, or free account. You can see the Fibonacci retracement. Can you see that?
Yes.
You just click that one.
Where?
TradingView. I'm using TradingView platform to show you right now.
Okay.
Right.
You're still with TradingView?
Yeah, I'm using TradingView. You can see that because it's very versatile. This platform. So I can use this one. Now you don't have to be if you are not too sure about this. You don't really have to use a Fibonacci. You just estimate.
Okay.
Because it is not, because if you want to ask you to learn so many things at one time, it will confuse you.
Okay.
Right. So try to make it easier for you first. No, see, if this is a low, this is a high. Roughly, where's the 50%? You can just roughly gauge this is a 50%.
Okay.
You don't have to be exact. And then if this is a 50%, is there any gap? Oh, yes, I have a gap. So you can forget about 50%, you focus on the gap.
Okay.
Now, this 50% is just a guide. It's just a guide, right? If I say, okay, this is a low, this is a high. Now, where's the 50%? Well, I can just, without using anything, just add, oh, this is a 50%. And this is another 50%. And this is another 50% of this range, right? This is, so this is 50%. This is maybe 75%.
Okay.
Just an estimate will do. Don't have to be exact.
Okay.
Otherwise, if you have to learn so many things, you get confused.
Okay.
Yeah. So to make it very simple, first of all, we need to know what is the trend. If the trend is bullish, and it's very easy to see bullish because the price had took out the high. Right? I know it's bullish. So it is bullish and the price just took out this new high. What do I expect the price to do next? I expect the price to
To
reverse
go down.
down. How
Yes.
do I know the price want to go down? I look for the what? Attack the high, attack the low. I know it's coming down.
Uh-huh.
I attack this high, attack this low. I know. So let's say this is a 4-hourly time frame, right? So you are not going to wait a 4-hourly time frame to look for that reversal pattern. If your higher time frame is 4 hours, because you are intraday, you trade on 4 hours. So you will have to go to 15 minutes time frame
Okay.
to look for that reversal.
Okay.
Means that you want to see the price attack this high, then it reverse down to attack this low,
Mm-hmm.
right? So now you know that price is going to reverse down.
Reverse.
It's coming down, right? Just like over here, you can see that.
Yes, that's right.
You can see this one
If
is, this is the low.
where's your arrow? Where's your cursor?
This
I
is
can't
the
see
high.
your I can't see your cursor.
Can you see what I draw?
Ah,
Can you see what
yes.
I draw?
Yes. Arrow. Yes.
Can you see this candle?
Yes.
This is the low that make this high. See, this is a high, right? So you can see what
Yes.
happened to the price. The price go and attack this high.
Uh-huh.
Then it reverse down. It attack this
Down.
low.
Low.
So now
Right. It's going to go down.
It's coming down.
Yeah.
But before it come down, since it has just take out the low, what do you expect the price to do first before it go down?
It will go up first.
Exactly. It will go up first and then go
Then
down.
it will go down.
You
Okay.
got it. You got it right. You got it right there. Right. So always remember, whenever the price take out a high, it will
And
have to
the
reverse
low,
down.
lower
have
than
to-
the low.
It has to retrace into this range.
Yes.
Whenever the price take out a high, make a new high, it will reverse lower. How do I know the price is going to reverse lower? In a lower time frame, if this is a H4, you go to your 15 minutes time frame.
Okay.
In a 15-minute time frame, you are going to see something here like this, which is a candle high being attacked, then candle low being
Lower
attacked.
than the low.
Yes, and the price retrace back up. Yes,
And
the
then
price
to
goes
go
up.
down. Okay.
So this is
And then
in
I
a
have
lower
to
time
look
frame.
for I'll have to look for a gap there.
Yes, below here you should see a gap. Now, next question is, where do you think the price is going to reverse to? At least 50% of this range,
Mhm.
which is around here. Now, around in the vicinity of this 50% and below, is there any gap? If there's a gap here, means the price is likely to come to this gap and then reverse back up.
Okay.
You follow?
Yes, yes, yes.
Yeah. So for this particular example, it's actually, you can monitor this example, US 30, right? We can, the price that took out the high, how can I know the price is going to reverse down? Remember, if we trade H4 is a higher time frame, you don't wait at H4 for the reverse. You must go to the M15. So when you go to M15, is there any reversal pattern? Is there any reversal pattern? Where's the highest high?
Yeah.
This
Okay.
one, right?
Yes.
Where is the low that make this high? The swing low that make this high? Can you see?
Yes.
This is a swing low. Why this is a swing low? Because on the left, on the right, you have a higher low. That's why we call this swing low.
Okay. I really need
This is
to
the swing low.
remember all these terminologies.
See, this is swing low. This is a swing low that make this swing high, right? So the moment this swing low is being violated,
Mhm.
where is it being violated?
That one, the black one.
This one. Can you see that? It trade
Yes.
below. So once this swing low being violated, we expect the price to go lower. But before it go lower, you see what happened to the
Good.
price?
It will go up first.
You go up first and then go lower. So it's exactly what I've just explained to you. We have a swing low that make this swing high. And once the price trade below this swing low, then make this swing high, we know the price is going to come down lower, but it will unlikely to come down in a straight line. Before it come down lower, it will pull back and then lower. And this is exactly what happened.
Yes, yes.
Right?
That's right.
It pull back, it go lower. Now see the price come here, but it don't go straight line all the way from here and all the way here.
Then
No,
up.
it pull
No,
back
then
again one
up.
more time and then down.
Okay.
All right. So whenever the price whenever the price make a swing low, a swing high, a swing low, they take out this swing low, it will have to pull back first. So now you have a new range. Where this pullback is going to be, it's going to be 50% of this range. Then go down.
Okay, 50%.
So look at this one also. We have a high, we have a low, and this low take out this swing low, right? So now we have this range that created. Now before the price come to make this low, where the price it has to retrace back at least 50% of this range and then go lower.
And I'll go up and I go lower again.
Yep.
Benny, is this tutorial recorded?
Yes.
Can I go back to this?
Yeah, I later I compress it, then I send it to you.
Thank you very much.
Okay, look at it. This is now more clear. In a 5 minutes time frame, we have a high, we have a low that took out this low. See what the price did? It retraced up into what? Into this gap, right? And then go lower. Can you see? Yeah. Yeah, that's it. Okay.
Yeah.
All right. Any more questions?
I think I think I just have to stop there to first
yeah. Let me see whether I hope the session is recorded. Yeah. I after the session I'll see whether I hope it's recorded.
Yes.
Yeah, it's recorded. Then I'll send it to you. Yeah.
Yes, thank you very much, because I really want to review it again, because
sure.
it's very.
I can see that you are really very, very newbie. Wow, these are all things that you should have already known.
Yeah.
You're way at back. But anyway,
why is it the other participants are not like just, or they're just not?
I mean, you have been you since last your workshop until now, it has been quite a while, right? For you, has been a while, right? But your understanding is quite elementary.
Okay.
You see, look, okay, now one more example. Look at this. We have a high, right? We have created a low. This range. Now, even the price want to go lower here, it will not go straight line, right? It go up first.
Yes.
Right? It go up to why it stopped there. Now, you look to your left, why the price stopped there. Can you see why the price stopped there? There's a gap.
Okay.
Can you see this candle? The price go up all the way to the gap, reverse down.
Okay.
See this three candle gap?
Yes.
Yeah.
Oh.
Okay.
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 So, Benny, a lot of attendants or participants of this, they're already earning.
I have no idea. I have no idea. I have
They don't they don't feed you.
no, they don't contact me. They don't tell me what's going on. If they need help, they contact me. I help, but they never update me up to that.
Okay.
Also never ask. I mean, this is things that if they tell me, I just take note. If they don't tell me, I also don't need to ask.
Okay, because you know what,
Yeah.
if they would tell you at for us newbies, we would really be very inspired.
Yeah, I know. But some people have moved on, that they make the money and then they are out of the mentorship. They are on their OA. After that, they have profitable. After that, they left the mentorship and then they are on their own and they never contact me again. So I have no idea.
Okay. See, SM Shing, she's no longer with you.
We have stopped the whole entire program after the COVID start.
Mhm.
Right. So yeah, all the SM support session is all no more, all stop.
Okay.
It's very simple. Is once we don't have the program running, I think the SM also don't get anything out of the whole entire thing, right? So I think they also doesn't want to commit anymore. Because when we have a program ongoing running, the SM come and help out, and no doubt they are being compensated for the time that they come in. But once we stop all this program, then they are not compensated anymore. So why should they want to continue contribute?
Okay, that's right. That's right. That's right.
Okay.
Okay.
Yeah.
Yes, thank you very much.
Okay. Welcome.
So next,
Once the session recorded, I'll send it to you. Yeah.
yes, Benny. After this month, I can have another session with you.
Every month you have you just ask for it. Yeah. But these are the things that you have to practice and practice. You must get your demo chart first. Go and get a demo chart. Demo is free. You don't have to pay. Demo chart, either Fusion Market or Trading View. Don't need to subscribe anything. Just get a demo chart first. Without a demo, if you don't have a chart, you can never practice. How are you going to practice? Whatever you learn, you forget.
Yes, that's right. I'll do that.
Get a demo chart. No need to find your account yet. Just get a demo chart.
Okay, thank you very much.
Yeah. Okay.
Okay. Bye-bye.
Bye.
Okay, bye.